Welcome to today's video. If you are new to investing and feel overwhelmed by the amount of information out there, don't worry. This video is designed to break everything down in a simple and beginner-friendly way. Today, you will learn the basics of investing, how to start with small money, which beginner-friendly investment options exist, and the key mistakes to avoid. By the end, you will feel confident and ready to take your first step towards building wealth. Before we dive in, make sure to like this video. What is investing and why it matters? Investing means putting your money into assets that grow in value over time, so your wealth can increase without relying only on active work or salary. Unlike saving, which keeps your money safe but stagnant, investing allows your money to work for you, giving you the chance to build financial independence, retire comfortably, and achieve long-term goals such as buying a house, funding education, or creating passive income. Investing also helps protect your money from inflation, which reduces the value of cash over time. Simply put, investing is the bridge between where you are financially now and where you want to be in the future. And starting early is one of the most powerful advantages you can give yourself. The second point is about understanding risk and return. Every investment comes with some level of risk, which is the possibility of losing money or not earning what you expected. In general, low-risk investments offer lower returns, while higher-risk investments can potentially provide higher growth. This is known as the risk-return trade-off. For beginners, the goal is not to avoid risk completely, but to choose investments that match your financial goals, time horizon, and comfort level. Understanding risk helps you avoid emotional decisions like panic selling during market dips, and it prepares you to think long-term. When you understand that market ups and downs are normal, you realize that consistent investing over time reduces risk and increases the chance of strong long-term returns. Types of investments for beginners. Beginner-friendly investments include stocks, bond, mutual fund, index fund, ETF, real estate, and even digital assets like crypto, if approached casually. Beginner-friendly investments include stocks, bonds, mutual funds, index funds, ETF, real estate, and even digital assets like crypto, if approached casually. Stocks represent ownership in a company and can offer high returns, while bonds are loans to governments or companies and are generally lower risk. Mutual funds and index funds are great for beginners because they pool many investments into one, spreading the risk and making it easier to diversify. ETFs work similarly but trade like stocks, offering flexibility and low costs. Real estate can provide long-term value and rental income, while crypto should only be a small portion of your portfolio due to volatility. Choosing a mix that reflects your goals and risk level is the best approach for beginners. How to start investing with small money? You don't need a large amount of money to start. Many platforms allow you to begin with as little as $5 or even less. The key is consistency. Investing small amounts regularly builds up over time through compound interest, which is the process of earning returns on your previous returns. Begin by opening an investment account, setting a monthly budget you can afford, and automating your contributions to avoid missing out. Start with simple, low-cost funds such as index fund or ETF, and gradually increase your investment amount as your income grows. Starting small removes the fear and builds momentum, showing you that investing is more about mindset and habit than initial capital. Diversification. Don't put all eggs in one basket. Diversification means spreading your money across different investment types to reduce risk. When you invest in many assets, the poor performance of one investment doesn't significantly damage your overall portfolio. For beginners, this can be easily achieved through index funds, ETF, or balanced mutual funds that contain hundreds of companies in different industries. Diversification protects your money, stabilizes long-term growth, and helps you avoid emotional decisions during market volatility. Think of it as building a strong financial foundation. You are not relying on one investment to succeed, but instead creating a system where everything works together to grow your wealth steadily. Long-term thinking and the power of compounding. Investing is most effective when you think long-term, because the value of your investments grows exponentially through compounding. Compounding means your profits begin earning more profits over time, which leads to massive growth if you stay consistent for years. Even small investments can turn into large amounts when left untouched and continuously contributed to. The earlier you start and the longer you stay invested, the bigger the compounding effect becomes. Long-term thinking also helps you ignore temporary market drops, reducing stress and improving your chances of success. In investing, time is more powerful than timing. Mistakes beginners should avoid. Many beginners lose money or get discouraged because they fall into common traps like trying to get rich quickly, investing without research, putting too much money into one asset, or selling during market dips out of fear. Avoid chasing trends, emotional decisions, or anything that promises guaranteed high returns. These are usually scams. Never invest money you need immediately for emergencies. Instead, focus on slow, steady, and consistent investing. Educate yourself. Start simple. Avoid debt-driven investing. And always remember that successful investing is not luck. It is discipline, patience, and good decision-making. Finally, start early, start small, be consistent, and keep learning. You don't need to be an expert. You just need to understand the basics and stay committed. Focus on building good financial habits, diversifying your portfolio, and thinking long-term. Over time, your investments will grow, create stability, and open doors to financial freedom. The most important step is simply starting. Your future self will thank you for it.